Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Friday, September 17, 2010. Let's start by taking a look at the euro-dollar pair, where we saw the euro fall from more than 1 month highs against the dollar after fresh concerns surfaced over the eurozone sovereign debt crisis. The common currency retreated from its highest level since August 11th at 1.3160 to near the 1.30 mark on the back of reports fiscally stressed Ireland could eventually ask for a lifeline, a charge later denied by Irish officials and the International Monetary Fund. The cost of insuring Irish bonds, however, against default rose to an all-time high Friday on the back of the speculation, and the spread on the 10-year Irish benchmark bond over corresponding German bonds also hit a new high of 396.5 basis points. The developments increased risk aversion around the pair, and we saw the dollar gaining as a result. Risk aversion was also increased by a weaker than expected U.S. consumer sentiment report, and that hurt demand for higher yielding currencies across the board. For instance, if we take a look at the US dollar Canadian dollar, we see a sharp move in favor of the US dollar after we had retested our lows for the week around 1.0215, and we see that we moved to actually test our highs for the week where we came into the week at around 1.0350. Now the greenback did ease up a little bit in the later part of New York trading, but overall it was a very risk-averse trading session. Still, overall, if we take this pair in a more longer time frame, we do see it moving in a downward fashion in favor of the Canadian dollar. So we have to see how we come back from the weekend. But again, our 1.0215 level will be our support to the downside. What's interesting though is that we did have a downward sloping resistance trend line that was broken in today's trading, but our 200 period moving average in the pair did seem to hold up as resistance in the later part of New York trading. It was a similar story with the Australian dollar, which moved higher overnight, as we did have a bit of risk appetite on the back of stronger equities and commodity prices. We reached a high of 0.9466, which was higher than what we had seen last week and is the highest levels in this pair since August 2008. However, in the European session, we see a turnaround, and we see the greenback reclaiming these losses that we had seen in the overnight session, putting us back to our levels we had seen in the previous two sessions around 0.9380. Now we did set up some support in yesterday's session that we tested twice, the 0.9330 area. So if we do continue to move downward, that'll be our next level as well. We have this 200 period moving average creeping up on the pair, so that should provide support as well. Now this pair has been a very strong performer over the past few weeks, so it could just be catching its breath before it continues its rally. Like I said, we did hit about a 2-year high in the pair. In a look at the pound-dollar pair, we see the pair reached its highest level in more than a month as it moved above its resistance from the past two sessions at the 1.5650 level. And we reached a high at around 1.5730, which if we plot Fibonacci retracement levels from our full swing from high to low between August and early September, we see corresponded very well with the 61.8% retracement for this pair. What's important too is that we see a break of our recent trading range. Like the last 3 weeks, we've been stuck between the levels between about 1.53 and 1.55, but we started moving higher in favor of the pound this week, breaking above our next level of resistance around 1.5550, used it as support and have climbed higher now. So we'll see if this means we have a new direction in the pair. Now for the most part, we did see the dollar weakening against the pound and euro and other higher yielders, as this week expectations have increased over a new round of quantitative easing by the Fed, which has been weighing on the dollar. With key US rates likely to remain very low for an even longer period, investors are using cheap dollars to fund bets on higher yielding currencies. Taking a look at a couple of US releases, we had flat US core consumer prices for August, which means the Fed can consider an additional round of stimulus without the concern of stoking inflation. Overall, prices rose 0.3% on the month, but as I mentioned, core prices were flat. Energy prices jumped 2.3% on the month, following a 2.6% boost in July, so that led the headline figure. In a second report, which was kind of disappointing, we had the UMich Consumer Sentiment Index, which posted a weaker than expected reading, coming in at 66.6 for the mid-month reading for September, which was also weaker than what we saw at the end of August at 68.9. The drop was fueled by a drop in future expectations, and what is interesting to note is that upper income families seem to be more downbeat than their lower earning counterparts. The entire decline in the sentiment index was recorded among households with incomes above $75,000. Although the Michigan survey does not ask about taxes, a drop in confidence may be a result of all the talk about ending the tax cuts for upper income earners at the end of this year. Overall, U.S. stocks traded mainly flat in today's session. And looking at our final currency pair, we should follow up with the US dollar Japanese yen, which we see in today's session traded in a super tight range near the highs for this week between 85.60 and 85.90. So the pair has managed to hold its gains following the Bank of Japan intervention that we had seen midweek. Traders are rightly so cautious about this pair, and we'll have to see how things shape up when we come back from the weekend. Now let's turn our attention to the upcoming fundamental docket, starting with key U.S. releases for next week. We have a slew of housing reports. On Monday, we start with a housing market index from NAHB. That's followed on Tuesday with housing starts and building permits. Wednesday, we have a government house price index measure. Thursday, we get existing home sales, and on Friday, we get new home sales. So something about housing pretty much every single day of the week. But Tuesday, we will also get the FOMC interest rate decision and statement. So a lot of investors and traders will be looking for any signs about quantitative easing from the Fed. Also on tap, we will get our weekly look at jobless claims as well as Friday's durable goods orders. Around the globe, in next week's session, Australia and the UK will release their central bank's meeting minutes. UK also posts its public sector borrowing figures on Tuesday. Canada releases a measure of consumer prices and retail sales Tuesday and Wednesday. Also on Wednesday, New Zealand posts its GDP figures for the second quarter. And we end the week with preliminary manufacturing and services PMIs from Eurozone, as well as Germany's IFO Business Climate Index. And that will wrap up our coverage of the Forex markets for this week. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you a great weekend.